This one entry right here is 80% of the money I have earned on Forex. It works on gold, it works on euro-dollar, it works off any time frame, and when you see it, you'll never clean it up. Over the years, I've tested dozens of strategies and most of them are rubbish. But one pattern kept appearing over and over again on every instrument I traded. Today, I analyze it in 7 minutes, the structure, the entry trigger, and one confirmation without which I won't open a single trade. No water, just a setup. So first, let me show you a trade that brought me almost 7,000. This trade was for gold. Here we see a downtrend and I'm waiting for that very moment. So here it is, the very moment that I used for the perfect entry into the trade. Here, of course, I open a long position because we have overcome, in fact, our trend line. We have now retested this trend line and I will set my take profit somewhere at this level. You can also connect a couple of indicators, which I'll tell you about later, but in the end, my trade looks like this, with a great ratio of about 1 to 3. Everything is great, so let's see how this position will work out. Well, this is where my trade closes, and now let me teach you how to make the same ones. So that you can immediately automatically learn how to look for jewelry entries for this transaction, let's talk about them first. So a successful entry into a trade consists of two things. The first is the context, and the second is the trigger to entry. The context is essentially a stock market situation where you start looking for a trigger to entry. As you noticed for my first trade, this one was on a trend reversal. It is the trend change that is the ideal condition for finding triggers for a one trades. That is, either your trend is changing from ascending to descending, or vice versa from descending to ascending, and somewhere at the beginning of new trend, you will have to look for this trade. That is, we exclude those options when the stock market simply moves between two levels. In no cases do we trade in such situations, they simply do not suit us. Now let's look at the trigger. That is, what essentially serves as the entrance to our trade. So entering into a trade can be based on several paths, but the most basic, most important thing is to overcome and retest either a trend line or some horizontal level that is located next to this trend line. Why the trend lines? It's actually very simple. When the stock market moves in a certain direction for a long time, let's say downward direction, as in this situation, we have many peaks, each of which is a certain level. Many people set their stop losses behind these levels, and accordingly, when the stock market starts to grow, their stop losses serve as fuel for our growth. And thus, the stock market gets additional acceleration, thereby allowing our trades to close very quickly. It is a breakdown or a test of the trend line that serves as a trigger for us. Let's use a simple example to consolidate this important information. Look, we have a certain level that the chart has been interacting for a long time. Now we are also in a downward movement, and I have drawn such a simple trend line beyond which I will expect. So naturally this figure looks like a fallen wedge, but the figure itself does not give us anything. The most important thing is to see the exit and retest of this trend line. Right now I have a good opportunity for a long position, and now there is a main question. Where to put your take profit and where to put your stop loss. There are the main questions you will have after you have found an interesting entry point. So let's go back to the scheme again. You can set a take profit based on 3 factors. The first is the zones of imbalance. If you don't know anything about them, just add an indicator of imbalance zones. You can turn it and see inefficiencies in the stock market that attract the price. So let's say there is one inefficiency here, but it is very high. And there is another inefficiency right below us. We can put a stop loss behind it, for example, but then my trade will be too big. The second way to place a stop loss and take profit is through a liquidity zone. There's also an automatic indicator that allows us to accurately determine the liquidity zone. You can also use them for stop loss and for take profit. First of all, placing your stop behind the level of liquidity. Yes, for example, behind this level of liquidity, and take profit before the level of liquidity. Well, the most basic is 0.5 of Fibonacci, the level that you stretch from the maximum to the minimum and place your take profit somewhere in the middle. This particular trade was made using the Fibonacci's grid, so I place my take profit somewhere at this level and I remove my stop loss in such a way that the risk to profit ratio is at least 1 to 2. So this is how easily a trade closes, which for a second brings me 2,929 profit. So if you're interested in developing and trading, I recommend subscribing to my Telegram channel using the link from the attached comment. Here are not only published reports of the signals, but you can also get the signals themselves for free. Moreover, you can copy all my transactions automatically by using a special link to my FX book. So let's quickly analyze my entry into the following trades. Here, as you can see, we also have a long downtrend. We also have a trend lines. I'm waiting for the price to not only break through this trend line, but also test either the trend line itself for some level. We are waiting for the retest. It could be some kind of Japanese candlestick that is close or at least a shadow touches of our trend line. And here I see a good entry. Unfortunately, the imbalance and liquidity zones don't show me much, so I have to use the Fibonacci grid again, and in general 0.5 Fibonacci is my goal, and as I said, I keep my stop loss away to the risk or to profit ratio will be at least 1 to 2. But if you are just starting to trade, then the ratio of 1 to 1.5 will also be very good for you. So that's the kind of trade we are getting, or this particular position earned me 4,338. Guys, all these transactions were made in gold in just a couple of days on a 5-minute time frame. That is, this pattern is really often repeated and it can be used in trading. I also had one more trade and it followed exactly the same logic. We had a trend line, it's much longer than shown here. She's had a lot of touches before too, and accordingly when the chart in the place reflected this trend line and we had such a huge shadow, I understand that after that the road is only down, and accordingly I opened another trade, also with a good risk to profit ratio, and I made good money on it. I'm sure that you will be able to calculate the position size yourself using a special website, babypips.com. I've been using it for a very long time. Here you just write the data from your account and position and calmly set up the lot that you need for trading. You will not lose more than planned. I hope this review of my strategy was useful to you. Subscribe to the channel and like this video, and we will meet you very soon.